Hello, everybody, and welcome to the Trading with Ashley show, coming at you live today from Tesla Studio. And we have had an incredible day in the markets. I mean, we were prepared for all the drama with the government shutdown. What drama? All we're seeing is green, green, green this October. What a way to start October. And if you're in my community, we are taking advantage of it and we are cashing up. But I wanted to bring you one particular trade that was so amazing for us. We were able to take our money, invest in a skip call option, and in a matter of 2 weeks, we were able to double our money. So for me, I invested $25,000 in this particular play, and then here we sit just 2 weeks later and I cashed out over $51,000. It's such an amazing trade that I wanted to share it with you and talk to you about my entry, my exit, and then how to rinse and repeat this trade when the time is right. I wanted to make sure you all knew what I was doing and how you could accomplish this for yourself. Now, the best part is about this trade, we actually financed part of it with sold puts. I'm going to let those sold puts continue to mature, but they're already 50% in profit. I love this trade hack so much. It works really well in a bullish market, and it allows you to take extreme advantage of how options work and put it in your favor. Now, for those of you that aren't aware of the terminology skip call option, I actually trademarked the term because I have seen that it is such a powerful trading tool for me. For those of you that are interested in what a skip call option is, I will leave that video at the end of this one. It fully explains what I have done with the skip call option and how you can use it to help increase your gains when you're trading leaps call options. Let's go into the computer and I'm going to show you everything I did. Here's the trade itself. It was on September the 15th that I actually called the trade, and I explained to them I was having a little bit of fun with Hood. I bought a skip and I financed it with sold puts. Let's look at the details. You can see here I bought to open a contract on Hood. It was a call option expiring January the 16th of 2026. At the time, I paid almost $25, so $24.89 for this. Well, I wanted to finance it so that this premium that I paid for my skip option would be paid for with premium that I earned from actually selling a put. So I decided to sell the 105 put that day. I did 2 contracts. They expire on the same day as the skip itself. Now, for this, I received $10.58 a contract. I did 2 contracts, and so I received all but about $300 for the premium that I paid, and then I received this premium. Now, money is being held for these 105 puts. It's $10,500 per contract. I am using margin, so it is taking a fraction of that, but if you were using direct cash, then you would be having to hold that cash out while this trade matures. Let's go see how it's performing today and why I made the decision to go ahead and close this out and enjoy doubling my money in about 2 weeks. But before we look at the progress we've made on this trade, let's look at where it was trading on September the 15th. This was the day that I called the trade. And it was right here. It was around that 108 mark. And it was very close to the 20-day moving average at the time. Now, anytime a stock is in a bullish mode, it's over 50 on the RSI, it has something on the horizon like Robinhood did with being included in the S&P, then if it touches that 20-day moving average, usually it's a really good time to consider maybe purchasing a skip, because the thesis is that if it's in a bullish mode and there's something that'll keep it in a bullish mode, in this case, it was knowing that it would be included in the S&P, if it hits that 20-day moving average, a lot of times buyers will step in. And that's exactly what happened. It played out exactly like I had thought it might. Here's the trade that I called that day. It was the 105 sold put, and this was helping to almost finance the skip. And you can see right here, I received $10.57 a contract. So what you do is you multiply this times 200 because I got 2 contracts, and that gives you the totals. But now that Robinhood has moved up from this point, these same contracts are only worth about $5. Well, the beauty of that is I get to keep the difference. You can see that they're 52% appreciated at that point. Now, depending on your cash flow and your ability to stay in this trade, you can stay in this and let this mature to where it's 100% profit. Or if you're short on cash, you could go ahead and buy these contracts back and you keep the difference of what you initially received to now what they cost to get out of. So for me, what really drives that decision is if I actually need the cash, I might exit at 50% for something that expires a few months from now. But the truth is, if I was able to pick up new Robinhood shares at 105 by leaving this contract open, I wouldn't mind that at all. I think getting it at 105 at this point would actually be very bullish in the longer term. So going back to the original trade right here, I'm going to go ahead and take some profit. Let's do that now. Now let me show you what played into my decision to go ahead and take some profit. We are trading at the very top of the Bollinger Band right now, and we are almost 75 on the RSI. So if this market comes under any type of pressure, this stock will more than likely retreat some, which is fine, but I want to go ahead and lock in profit. When I'm this close to expiration, I want to go ahead and take advantage of that anytime my RSI is well over 70 and we're at the top of the band and we only have a few more months left in the contract before time decay takes hold. I want to go ahead and cash up. Now on pullbacks, if we get anywhere near this 20-day moving average again, I'll reload and I might even go out a little bit further. So let's go ahead and lock in this total gain of almost $26,000 in just a few weeks. I am going to sell to close these 10 contracts. Here's the trade all queued up. You can see here that my profit is $26,000 and then I will receive $50,000 back in my account. This is what I paid for them coupled with what I am getting in profit. Perfect. That filled at 51.09. Now I would call that a really good day at the office. For those of you wanting to duplicate a similar trade, let's recap what happened. If a stock is at a level of support while it's in a bullish mode, go ahead and consider buying a skip call option on that stock. Then, to finance it, look for a similar trade with a similar date and sell put options. Now, be sure that you select a strike price that you would not mind taking ownership of the shares if, in fact, the stock retreated. Then all you have to do is wait for some appreciation. Usually as it heads up the Bollinger Band, you can start to consider taking profit. Now, because of the shorter duration with these skip call options, I definitely would want to take profit at about 60 to 45 days before expiration. That ensures that I don't have to worry about aggressive time decay. Then you can let your sold put options continue to mature and exit when you're ready. Either you exit at the 50% mark or you exit when you need to free up the cash for other trades. Now, for those of you that aren't on my email list, I want to make sure you sign up with the link below. I am going to send you some free trading hacks, and I don't want you to miss out. It's completely free. All you need to do is sign up with your email below. Now, remember, if you're with me, Trading with Ashley, there is no trader left behind. Now, remember, I promised you that video on the skip call option. I'm going to leave that for you right here. Don't forget to sign up for my free email list below so that I can send you a lot of very clever trading hacks.